I am driven. Let's break down these top Reddit trending stocks. The clear theme in today's market is a tale of two cities. The people making the AI, hardware and memory, are popping champagne, while the people buying the AI, cloud giants, are stuck footing the massive bill. Sentiment is rapidly repricing the reality of capital expenditures, CapEx. This isn't just a list, it's your survival guide for today's session. Here is the ultimate investment tier list for the Reddit Top 10. Rank 1. SPY, Spider S&P 500 ETF Trust. This is the market's baseline pulse. Right now, the S&P 500 is in a phase of indigestion. While the AI narrative remains strong, the broader index is struggling to stomach the massive spending plans thrown out by tech titans like Amazon and Microsoft. When the leaders stumble, it's hard for the index to sprint. It's safe, but it's not where the alpha is today. Tier, C tier, watch and wait. The verdict? It's the default option, but currently lacks a short-term catalyst to shake off the heavy tech capex drag. Rank 2, Micron Technology, MU. Two words, S tier. Micron is the absolute king of this cycle right now. Why? Because in the AI gold rush, they are the ones selling the shovels, and they are completely sold out of shovels. The analysis? Their high bandwidth memory HBM4 capacity is sold out through 2026 and beyond. That isn't just demand, that is absolute pricing power. With AI data centers starving for memory, Micron is riding a super cycle that has sent shares soaring year to date. Tier, S tier, top pick. The verdict? Sold out capacity plus pricing power equals the purest winner in AI hardware right now. Rank 3, Microsoft MSFT. This is the classic long-term winner, short-term punching bag. The analysis? Their Azure cloud growth is solid, and Copilot is the industry standard, but investors are spooked by the sheer amount of cash they're burning to build this AI infrastructure, the dreaded CapEx versus growth decoupling. The market is asking, you spent billions, where is the return? That anxiety is capping the stock. Tier? B tier, solid but headwinds. The verdict? Fundamental excellence, but upside is limited as long as Wall Street is fixated on margin compression. Rank 4, Reddit, RDDT. Look who's shining, the host of the list itself, Reddit. The analysis? Reddit just delivered a masterclass quarter. Revenue up nearly 70% and strong guidance for Q1 2026. This is no longer just a meme stock, it has matured into a legitimate advertising and data licensing machine. Profitable and accelerating user growth, that's a rare combo. Tier, A tier, strong. The verdict? Exceptional execution. When a social media play turns GAAP profitable with high growth, you have to pay attention. Rank 5, AST Space Mobile, ASTS. A classic case of good news, bad price. The analysis? Technically, they succeeded with the Bluebird 6 satellite deployment, a huge milestone. Financially, they just announced a massive convertible note offering. For existing shareholders, that spells significant dilution. The tech works, but your equity just got watered down. Tier, C tier, high risk. The verdict? Massive long-term potential is currently being offset by the short-term pain of dilution. Unless you have a 5-year horizon, this volatility will hurt. Rank 6, Robinhood, HOOD. Unfortunately, it's getting chilly for Robinhood. The analysis? Their latest earnings were a letdown, driven primarily by a 38% crash in crypto revenue. When the crypto market cools, half of Robinhood's engine shuts off. Combined with an EPS miss, the market has lost patience with the growth story here. Tier, D tier, avoid. The verdict? Too dependent on crypto volumes, and right now, that driver is asleep at the wheel. Rank 7, Nebius Group, NBIS. This is a pure play AI infrastructure bet. The analysis? The growth numbers are staggering, revenue up over 300%. This is a company in a hyper-growth phase. However, it comes with extreme volatility and regulatory baggage. It's a lottery ticket, but the odds look interesting. Tier, B tier, high risk, high reward. The verdict? If you can stomach the roller coaster, the growth velocity is unlike almost anything else on the market. Rank 8, SanDisk, SNDK. Note, in the 2026 context, SanDisk is back in the spotlight as a key storage player. The analysis? Reddit discussion frames this as a structural growth story. With their BICS 8 technology and 50% plus gross margins, they are a direct beneficiary of enterprise SSD demand for AI. Despite some recent profit-taking, the fundamentals, specifically data center storage hunger, are robust. Tier? A tier, strong. The verdict? High-margin storage is digital real estate in the AI era. Pullbacks here are opportunities. Rank 9, Amazon, AMZN, the elephant in the room, or perhaps the bleeding giant. The analysis? Amazon dropped a bombshell with a 2026 capex grant hovering around $200 billion. The market reacted with panic selling. Even though AWS growth accelerated to 24%, investors are terrified by the scale of the spending. Tier? C tier, penalty box. The verdict? Long-term, AWS is still the cloud king, but short-term, this stock is in the CapEx penalty box. It won't bounce until the market digests what $200 billion in spending actually means for free cash flow. Rank 10, Invesco QQQ ETF, the Nasdaq 100 proxy. The analysis? Since Amazon and Microsoft, two of its biggest holdings, are both being punished for spending too much money, the QQQ naturally suffers. It's more fragile than SPY right now because it's overweight on the very tech stocks that are currently out of favor. Tier? C tier, follower. The verdict? Until the tech giants resolve the spending versus growth debate, the QQQ will remain under pressure. The final recap: Super tier, MU. A tier, RDDT, SNDK. B tier, MSFT, NBIS. C tier, SPY, QQQ, AMZN, ASTS. D tier, HOOD.